It's time for Money Tuesday, and for folks who have a little money in the stock market right now or your 401k, it's losing money Tuesday the way the market's been going. Marshall Clay with the Welch Group joins us now to talk about the best strategy to weather this storm. Good to see you this morning, Marshall. It is one of those things where we've talked about it in several segments before. You look at the Dow and you don't want to even peek at your retirement account right now.
That's right, and I think it appears worse than maybe it really is, and I think that's because of the onset of inflation, right? We've grown accustomed to stock market down, bond market up. Well, that's not actually happening this year. The bond market is actually down along with the stock market. So when people are opening up their account statements, last month, they're saying, wow, I'm down a lot. And the reason for that is the bond market is not offsetting the losses with the stock market. And so my concern is that people are going to get into that binary choice mindset where it's either an all-in or an all-out decision, and I think that's a big mistake. So we're going to talk about some
big mistake depending on where you are in terms of close to retirement, though, right?
Correct, but I think too. If you look at the market, the broader market's pulled back about 21% already this year. The broader bond market, this is amazing, is down about 13 or 14% year to date. So a lot of the downside is probably already built in. We may have a little bit more to go here over the next couple of months, but I don't think now's the time to be making the binary choice to be getting out of the market.
All right, so then what should we be doing right now?
Well, always assume that you're wrong, right? So I always tell people this, and this both, if you think that whatever your market narrative is, if you think the market's going to the moon or if you think it's crashing, always assume that you're wrong and build something into your portfolio that allows for you to be wrong there. So what I mean by that is, look, if you think the stock market's going to continue to go up, rebalance that portfolio and put some stuff in some more conservative areas of the market so that if you're wrong, you're protected to the downside. The same holds true now. If you think it's going way down, look, continue to buy some of these really high quality companies, these high quality mutual funds when we're down here at these really low levels in case we get some positive news in the market.
There's probably a lot of people watching who may have a 401k and they're just like, I just have the money taken out of my check. I don't really even know what my stocks are in. Maybe they've got one of those funds where it's just the retirement year that they're shooting for.
Yeah, you're exactly right. And I think I'm going to talk a little bit more in detail next week about 401ks and how to think about specifically 401ks. But I think there's some things that you can do where, look, you got to go in, and if there's some target date bond fund options, maybe that's appropriate for someone who absolutely has no clue what they're doing or doesn't really want to look at it at all. So there's some options in there, but I think you have to have a basic understanding of what it is that you own and how those assets are going to respond, and not only in really good markets, but also in bad markets, because that helps you understand what's going on. It helps you navigate these.
If I want to reallocate, what sectors do I want to reallocate in?
Well, I think, right now, if you look over the last couple of years, what did really well in 2020, 2021 were the high growth technology names. And the reason for that is we had really, really low interest rates and we had a lot of money being injected into the economy. So there was a lot of speculation, right? So when you're trying to develop that sell side discipline, you need to understand that those areas are not always going to be the stars, right? There's going to be ebbs and flows in the market. There's going to be cycles. And so you have to develop that sell side discipline to redeploy that capital towards areas of the economy that are maybe a little bit more stable. And that's what you're seeing right now. You're seeing the companies that can make money through good times and in bad, pay really high quality dividends. They're doing really, really well right now. So next week, I'm going to talk about how to identify where those things are inside the 401k.
All right, so stay tuned for next Tuesday. Marshall Clay with the Welch Group. We do appreciate it.
All right, thank you, Mike.
All right, we're going to take a break, come back with a buzz. Stick around.